All right, let's talk about that moment. You know the one. You file your taxes thinking you're all set, and then, bam, you owe money. And you're thinking, how? I've been paying taxes all year long. Well, you're not crazy, and you're definitely not alone. So today, we're going to solve this paycheck puzzle. Yeah, it's a totally logical thought, right? You see that line on your pay stub for federal withholding, and you figure, okay, that's my bill, and I've paid it. It feels done. But that's where things get a little more complicated. What's taken out isn't the final word.
Because here's the thing. That money taken from your paycheck, it's not your actual tax bill. It's just an estimate. It's your employer's best guess based on some information you gave them of what you'll probably owe for the whole year. And well, sometimes that guess is a little off.
So why all the guesswork? It's because the U.S. federal income tax system is what's called a pay-as-you-go system. The government doesn't want to wait until next April to get all its money in one big chunk. Nope, they want you to pay your taxes as you're earning the income.
And that's exactly what tax withholding is. You can think of it like a subscription service for your taxes. Every paycheck, your employer sets aside a little bit of money and sends it off to the government for you. All those little payments then get added up and credited to your name.
Let's just quickly follow the money, shall we? First, you earn your gross pay. That's the big number at the top. Then, your employer looks at a special form to figure out how much to take out. They withhold those taxes, and what's left over, your net pay, is what actually hits your bank account.
And what's that special form? It's the good old Form W-4. Now listen, this is way more than just another piece of new hire paperwork. This is your instruction manual to your employer. You're the one telling them, hey, this is my situation, so here's roughly how much tax to take out.
So what happens when those instructions you gave them, maybe months or even years ago, don't really match your life anymore? Well, that's when the estimate goes wrong, and that pay-as-you-go system can give you a pretty big surprise when you file.
The guess can really only be wrong in two ways. If your employer takes out too much money all year, that's called over-withholding. But if they take out too little, that's under-withholding. One gets you a check from the government, and the other, well, the other is why you might be watching this.
And let's talk about that check from the government for a second. We all love getting a tax refund, don't we? But it is not free money. A refund is just the government giving you your own money back because you paid them too much during the year. You basically gave them an interest-free loan.
So why do these estimates go wrong so often? Simple. Life happens. Your tax situation isn't static. You get married, you have a baby, you start a side hustle. All of these things, and more, can totally change how much tax you actually owe. But if you never updated your W-4, your withholding is still stuck in the past.
Okay, let's walk through a super common scenario that catches so many people off guard. It's the classic tale of having more than one income stream. This is probably one of the biggest reasons for a surprise tax bill.
All right, so let's imagine you've got your main job. You make a good salary. Your employer has your W-4, and they're dutifully withholding taxes from every paycheck. It's automatic, it feels taken care of, so far so good, right?
But you've also got a side hustle. Maybe you drive for a ride share, do some freelance writing, or sell stuff online. And you made an extra 10 grand. Awesome. But here is the absolute crucial difference. For this money, there's no employer. There's nobody automatically withholding any taxes at all. Just look at the difference when we put them side by side. Your W-2 job, withholding is handled for you. Your side hustle, that's all on you, my friend. And check out the FICA taxes for Social Security and Medicare. With a regular job, you split that with your employer. When you're self-employed, you pay the whole shebang yourself. It's literally double the rate, and that can be a huge shock. So, the year is over. You've had all this money withheld from your day job, and you've got this other pile of income from your side hustle where nothing was withheld. Now it's time to put it all together and face the music. It's the moment of truth.
You know, when you file your return, it really all just comes down to this one simple piece of math. The government first figures out how much tax you owe on all your income combined. Then they just subtract what you already paid through withholding. If the result is a positive number, you get a refund. If it's negative, you get a bill.
And this takes us right back to that pay-as-you-go idea. The IRS says it right here. That applies to your side hustle income too. Even without an employer, you're supposed to be paying taxes on that money during the year. That's why you hear about people making quarterly estimated tax payments to stay on track.
So what's the big takeaway here? The system isn't really meant to give you a big refund or a big bill. The real goal is to get that final number as close to zero as possible. And you can do that. By understanding this stuff, you can adjust your W-4 at work or make those estimated payments so there are no scary surprises come tax time. It's about being in control.
And there you have it, the paycheck puzzle solved. Now you know that withholding is really just an ongoing estimate. If you found this helpful and want more explainers that make complicated stuff simple, go ahead and subscribe to the channel. Thanks for tuning in.